Fed says to a bank, you've got a bunch of bonds, we'll take them off your hand, it'll help your liquidity. And if they do it enough, it looks suspicious. The overnight is 70 to 80 billion a night, and they're admitting to 70 billion a month. They're big, fat, dirty liars. The smoke is coming from repo because it's concealing the infinite QE. We must go to infinite QE or the system breaks.
Hey friends, Sean from SGT Report here. Hey, this is going to be an interview you're going to want to pass around to your friends, your neighbors, your colleagues, your family. You're going to want to wake people up. It's time to get our affairs in order and prepare. And to that end, I want to thank this video's sponsor, the Patriot Solar Bank. With all the earthquakes and the recent power outages in California, it's very simple to understand why it's important to have your own power bank for your cell phone and other items. You'll never have to waste money on batteries again because it's solar powered, and with a dual USB port, you can charge up to 2 devices at once, and you can charge your phone obviously anywhere with this bad boy. It's lightweight and very durable, compact, and great for all emergencies. The device features include solar powered recharging, dual USB ports, 8,000 mAh battery capacity, LED lamp illumination, USB cable, and detachable compass. The Patriot Solar Bank is a perfect gift, but there's a limited supply, so get yours today at a discount before they sell out. Use promo code SGT15 to save 15% off your order. Take advantage of it now and give your family the gift of power anywhere in the world. Just visit patriotsolarbank.com. I'll leave the link below this video. All right, guys, thanks so much. Let's get going. I have Jim Willie on the line. He is the owner and founder of golden-jackass.com. Jim Willie's going to take us through the crash because, as I just covered with David Jensen, we are in a crash. That's the bottom line. Jim, how are you?
I'm doing well. You know, I got to admit, I'm a lot more uneasy than I've ever been in years. This is a bond market crisis that I have been forecasting for the last 3 or 4 years, and I think it's going to be at least 3 times, maybe 5 times as big and powerful and enormous as the Lehman crisis. Because right now the Treasury bond, U.S. Treasuries are the subprime bond. It's not just mortgage bonds now, it's the Treasury, and that's the global currency reserve, most popular and common asset in central banks across the world. So as we move down in interest rate, Sean, we're going to experience like an electrical field to repel off 0%. You cannot have a global currency reserve where the bond goes negative. You cannot do that. You might be able to do it for some European bonds like the Bund in Germany and others, but you can't do that for the global currency reserve. Instead of paying out a small negative yield, central banks will dump the treasuries and buy gold. In fact, I think that's what the Basel directive is from the Bank for International Settlement. Jelly Zylstra outlined that entire plan 20 years ago, and we're here now. He outlined a situation whereby major central banks would be loaded down with insolvency and buyer of last resort, the consequence of that. And they would get themselves out of the insolvent jam by loading up on gold bullion purchases and then having a tenfold increase in the gold price. So we're in the planning and execution stage for that now. Hugo Salinas Price let it be known that through his contacts, several central banks informed him that they are using closely aligned financial firms and double booking on their accounting to load up on gold bullion bar purchases, dumping sovereigns like the treasury bonds and doing it all quietly. They don't want us to know what they're doing because they don't want the public to drive up the price double while they're accumulating. So it's all false news, false narrative, false justification, gold, the barbaric relic. But you know, the big incident happened, a big event happened this week, John, and it was the Dutch National Bank. They announced, it's the Holland, Netherlands. The Dutch National Bank announced that there's only one solution for the bond market crisis that has begun, and that is for gold to become the solution. I think the Dutch might have actually been speaking with kind of a, I don't know how to describe this well. The Dutch were moving, I'm sorry, the Germans were moving the Dutch lips. The Germans are very vocal about their objections for the European Central Bank. Very, very vocal. They dislike everything that the Euro Central Bank has ever done, whether bond purchases, ratio requirements, participation with corporate bond purchases. The Germans just hate the policy from the Euro Central Bank. So I think they move their hands with the Dutch mouthpiece, and because they're joined at the hip. They've been joined at the hip for 100 years. We're in the middle of a crisis, and it's not just a bond market crisis. It's a global dollar rejection crisis. It's a crude oil market making very rapid steps, very large steps away from the dollar as the currency of trade. And Putin is joining on to the German-Iranian Instex payment system, trying to enlist the membership of the Turkish and the Indians. Unbelievable. So Europe is gradually moving toward a euro standard for oil trade, with what appears to be Russian blessing and annexation, or membership, joining, declaration, confirmation, call it what you wish. The dollar managers are losing control of the oil market. And this is a story that's not very well told. I mean, all these different crisis points have enormous tentacles. For instance, the shale and fracking oil sector in the Midwest and Texas, etc. It's all running at extremely negative. They're running negative, losing operations, and they're doing it willingly with support from Wall Street banks. And why are they doing it? Well, to create dollar volume in the oil industry. The petrodollar is dying a horrible death. And part of the wake for that is filling the void with unprofitable shale industry output. You got another crisis. They don't want to admit it, but the Fed has entered infinite QE forever. Each of these stories has enormous tentacles, and you could go on for an hour on each one of the stories. But they're admitting to $70 or $80 billion a month in repo actions. That's Treasury repurchases. They call them repos. Well, the reality is that's the amount per day, not per month. It's 70 billion per night, overnight, every day. Okay, multiply that by, say, 20 or 22 for the number of active days, and you get $1.5 trillion per month. That's infinite QE in my book. We're at infinite QE right now. You can go on and on. The primary bond dealers are overloaded. They can't find buyers to take their supply. You got tremendous abuses of leverage. Banks are not only involved. Well, a very big question is, why is there so much volume in the repo overnight? I offer two explanations, and I don't say it's exclusively one or the other. I think it's both. Banks don't trust the collateral that's being offered at the window.
Right.
They don't like, say, some of the mortgage bonds or car loan bonds. They don't like the treasury bonds. I mean, treasuries are rated AAA almost by law, by fiat, by declaration, by slamming a fist, by threatening the S&P debt rating agency executives. He had to resign after that, what was it, 2012 event? They don't like the collateral, but there's a second reason. They don't trust each other. They don't trust their collateral. I mean, if they're doing interbank lending, it could be that one bank says to the other, oh, you're trying to hand off junk. Right. You're trying to hand off your worst, most impaired paper. So they don't want to get involved in it, and the Fed has to take it. buyer of last resort. They're ruining the Fed balance sheet, and now they're expanding it and ruining it further. Okay, the second reason that's not being discussed much, it is being discussed a little bit. You hear it once in a while from a not so much a clever analyst, but an astute analyst or someone who has a good ear to the ground and has good connections. But it seems like there's at least one failing bank right now. They don't want to talk about it. And I got a good reason why they don't want to talk about it. And it's not the obvious one like, oh gosh, they don't want to cause a panic. No, it's far more complicated than that. There's a lot of discussion that it's Deutsche Bank US subsidiary. I think it could be Wells Fargo, it could be Citibank. But here's the reason why they don't want to talk about it. After 2008, well, I should back up. Before 2008, there was like a designated hitter for the bank derivatives, and it was Morgan Stanley. Morgan Stanley racked up $8.5 trillion worth of interest rate swap derivatives. At the same time, there was a very big rally in 2006 and 2007 in the bond market. The 10-year yield went from 2.4 down to 1.6. They all declared, isn't this wonderful? There's a bond market rally. No, there was an engineered derivative generated rally that was totally fake and caused a lot of people to join the bond market rally. And I think they're going to get burned sooner or later, probably by a debt default. But before 2008, Morgan Stanley had the lion's share of the derivatives. Well, after 2008, they spread it around to a dozen banks. All the Wall Street banks, 2 or 3 French big banks, Deutsche Bank. So it's about 10 or 12 banks that share the big derivative load. Now, if one big bank is in failure mode, it means they all 10 are in failure mode. So they can't admit to even one being in failure mode. This is very important. I got one other major point to make. It's not so much a crisis within a market. It's a crisis within a really foul factor. I made a forecast, Sean, back when I started the newsletter, the first couple of years, 04, 05, 06. I said, in the end chapter for the dollar, the U.S. military will become a major factor in defending the dollar system.
If we could just circle back to something you brought up that I didn't know about, I missed this issue. Central bank issues stunning warning. If the entire system collapses, gold will be needed to start over. I missed that, and you're saying that came from the Dutch central bank? Yeah, that's shocking because it's my understanding that the Rothschilds own just about every central bank on earth, sans the one over in Iran and a couple other spots on the planet. That's stunning because they're acknowledging that the entire system could collapse with that statement.
They're admitting the bond market crisis just for beginners. They're also admitting that the treasury bonds are in trouble and could be the subprime bond. That's not a direct statement by them, but it's implicit. They're also admitting that the petrodollar implicitly is dying. So let me make my personal argument here. I was told in 2015, roughly, or 14, roughly when the Ukraine war broke out, that there was a major objective by the Eastern powers in cooperation with the best elements of the Western powers. And I've come to learn that that's the Interpol Fraud Investigation Unit and the White Hats of the Pentagon. Here's what the project was: to eliminate the middle ranks of the banker cabal. And that's the Rothschild execution team. I don't mean execution firing squad. I mean execution getting projects done. The project execution team. And I was told that there would be 3 types of resolution. They would force an individual, like a mid-level captain who's involved in, slush funds and special purpose vehicles and all this stuff. Okay, they would invite him to flip. And the person could retain, say, 80% of his personal wealth, provided he exchanged and provided, I didn't say what, provided he put on the table a lot of very damaging evidence, data, bank accounts, account statements, trade flow, contracts, hit squads. Okay, that's what we call the group that was flipped. They were flipped into cooperating. It's a police term. The second group was told, you can cooperate with us, and if you don't, you're going to be in big, big trouble. But they weren't deemed to be important enough at high enough a level, so they were stripped of 80% of their wealth. So the first group who flipped kept 80%. The second group who were stripped lost 80% of their wealth, give or take a few percent. And they were just uncooperative. They wouldn't work out. They wouldn't provide any data. And they said, okay, all right, well, we're going to strip you of your wealth, but you won't miss a meal. You'll have to limp along at, 15 or $20 billion in net worth. The third group was considered so nasty, so dangerous, so nefarious, so deadly that they were just plain killed off. Okay, so they were flipped, stripped, or killed. I believe that a lot of central bank executives now saw what was happening and no longer believe that they're under great threat, nor do they believe that they need to follow the exact orders that were issued a while back and maybe not repeated a whole lot more, because the middle level ranks of the banker cabal have been eliminated. 90% eliminated is what I've heard. I asked a good question: who did the killing? And I was told the Hong Kong triad was hired. Okay, so the Dutch National Bank, I believe, spoke on behalf of the Germans. But you make a good point. I've heard that the only central bank that is still in Rothschild control is the French. The only one is the French. That's Evelyn Rothschild.
Right. That's stunning. I want to back up what you're saying just to some extent with the recollection of back in 2017, Saudi Arabia arresting 11 princes, including billionaire Al-Walid bin Talal. Like, that was a big deal. That was a seismic shock. Nobody saw that coming. So maybe some of what you're saying has come to pass. And, we don't have to get into the areas of Q, but I definitely think that there is a group of white hats that have been aligned against this Soros, Rothschild, Clinton, Obama, New World Order, that had that witch become president would have continued unimpeded. And we would be facing exactly what the Germans are facing under Merkel, or the French are facing under Macron.
I agree. I've got some German contacts. Americans aren't aware of this. I've got 2 or 3 German contacts, and they're smart people. They're subscribers to the Hat-Trick Letter. And what they're telling me is that they're absolutely swamped, flooded, and inundated every single day in the news and financial journals by global warming in Germany. The stupidity of global warming, climate change, global warming, CO2, carbon tax. It's in the news every single day. It's just inundation of bullshit.
Yeah, it's brainwashing.
Brainwashing
in the name of
control.
Carbon taxes for the Rothschilds and the big banks to bail us out and save the planet. Meanwhile, China and India aren't going to play ball. I'm with you. The world's waking up to that Agenda 2030 lie.
The Germans are not waking up to that agenda. I've asked the question to one particular client, direct conversation. I said, if you've got in the room like a Lions Club or some business organization, social group, and you got 100 people in the room, how many people buy into the bullshit of the climate change? He said 95 to 98. He said it's unbelievable. It dominates their conversation. I said, okay, they've got an accomplished mission. They've changed the mindset of the German people and the German commercial sector. It's sad. It's really sad. I tell you, I'm overwhelmed. I'm overwhelmed by the crises.
Well, I am too. I am too, and it's hard. I want to get back to the bond market. Right, exactly.
Go ahead.
I'm overwhelmed too because I can speak the language, right? But it's not my first language. It's not my native tongue. So when we talk about the bond market, I've never purchased bonds. I've never been an active bond trader. So a lot of that stuff is over my head. And we talk about the 10-year and we talk about the 30-year. Trying to finance this nation's trillions of dollars in debt with 30-year bonds, and now I think they're even talking about 100-year bonds, it's just absolutely preposterous. Even I know that, and it's not my native tongue. But can
We'll
you
never sell
explain,
100. We'll never sell a 100-year bond.
but can you explain to people why you're so concerned about the bond market? I know that the bond market absolutely dwarfs the stock market, just to give people perspective. And if the bond market begins to crash, it's game over. But can you just explain that with negative interest rates and, the Fed printing into oblivion? Just explain why you're so concerned about the bond market for those of us to whom it's not our native tongue.
Sure. I got my first experience when I was a little boy. I had a paper route, and I put some of my savings into savings bonds, U.S. government savings bonds. I don't remember the exact name, but they were yellow. And anyway, the big issue right here, Sean, is a fiscal crisis. And that is the official name for a crisis whereby the U.S. government debt cannot be financed. We've got $21 trillion in accumulative debt. But that aside, I mean, it's hard to put that aside, but that aside, we must finance $1.2 trillion or $1.4 trillion this year. Now, we lie through our teeth. We come up with the phony accounting and say, well, it's really 560 or it's 620 or it's 640 billion. Well, I've got a simpler way of calculating it. What was the debt a year ago at the end of September? What's the debt now at the end of September? Do you mind if I subtract the two? Because I get 1.4 trillion. I don't care about your adjustments. You don't do seasonal adjustments on 12-month data. Got news for you. What they do instead is one-offs. Well, there was a lot of flood insurance stuff for the South. There was a lot of aid to farmers in the Midwest. There was a lot of California fire aid. There was some financing with Wall Street for emergency funding.
Okay. It's still real money and real debt.
It's still real money, still real debt, and it adds up to $1.4 trillion this year. Okay, we're having trouble financing it. And part of the reason, there are many reasons, I shouldn't say part. There are many reasons why foreigners don't want to invest in our debt. To begin with, they see that it's out of control, that our debt doubled under the baby Bush administration, our debt doubled under the Obama administration, and our debt is just still accelerating under the Trump administration. So they don't want to finance an unbridled horse that's broken through the gate. Second reason, you've got the Skidmore report with Catherine Fitz, Michigan State professor with Catherine Fitz of Solaris.
Sure.
They, just from analyzing 4 departments, they came up with $22 trillion missing. The Pentagon has never had a completed audit, period. Every one that has began in good faith and ended in total frustration for, I think, intentional mucky-muck in the accounting books to hide pilferage. Okay, so they see that. They also see that the United States the government is run by the Wall Street banks, and the Wall Street banks are engaged in tremendous fraud. They saw the TARP fund theft of $700 billion in 2008. They see the evidence of the derivatives. I think the derivatives, like interest rate swap derivatives, which is kind of an internal two-way arbitrage, I think the international investors are concluding what I'm concluding, that between 50 and 70% of all U.S. government debt is financed through derivatives and treasury bonds generated through false fabricated machinery.
Yeah.
50 to 70%. Okay, and there are other reasons. They don't like how the U.S. government is using the military to enforce compliance, stay within the SWIFT system. We'll freeze all your bank accounts. We'll just do all kinds of nefarious things to, goad you back into the dollar camp. And they don't like it. And it spawned the entire Belt and Road Initiative, which, by the way, in the first half of 2019 here, it spawned $600 billion in actual trade. That's astonishing. So there's no sufficient bond demand, and it's as simple as that. And you've got the primary bond dealers who are under contract to buy up all what's not purchased by bond investors. And they're loaded to the gills. They can't get rid of it. And you had 2 failed treasury auctions that didn't get much publicity, but they went to a telephone system instead of a conference room where the data is right on the wall. Like, here's the bid to cover, and the bid to cover was under 1. That means a bond market auction failure. They have had 2 of them. They don't want it publicized. So we've got a funding problem for the government debt, the new deficits that need to be financed. We can't finance them. And the big banks are having their own trouble with defaulted loans. You've got the shale and the fracking sector with defaulting loans. They're just running deeper into the negative. They're lending the money to manage their debt service. Okay, this is all the bond market crisis, and it comes under the heading of fiscal crisis. Government fiscal crisis. Cannot fund the deficit. And when that happens, you sometimes get a shutdown of the government. And we've had threats of that. You sometimes get just ridiculous policy changes, like maybe potentially trimming Social Security. I've been on Social Security now. I've gotten 16 months, 17 months, and it's kind of nice. I paid into it for 30 years. It's kind of nice receiving something, but I think it's going to be impinged upon. I think it's going to get cut 10, 15, 20%. It depends on how long you've been in the system. The longer you're in the system, the less they cut. The more years you've got to go before you enter the system through eligibility, the more likely it is you're going to have to wait a little bit longer, and your benefit will be even smaller. I hope that answers the question for the bond market, but I could go on and on. The repo market is an infinite QE in disguise. Repo is repurchase. The Fed says to a bank, you've got a bunch of bonds, we'll take them off your hand, it'll help your liquidity. You'll get some cash. And if they do it enough, it looks suspicious. And the overnight, the key is it's being done overnight. Everybody's asleep. Mm-hmm. The overnight is 70 to 80 billion a night. And they're admitting to 70 billion a month. They're big, fat, dirty liars. So this is all getting very, very dicey. And what they're also telling the banks is increase your leverage and reduce your asset base. Just think of the Sears Tower. Make it 25 more floors and let's reduce the lobby footprint.
Yeah. That's a very good analogy, actually.
Oh, well, thanks. It took me some time to come up with it. I came up with it a couple of years ago because that's when they started the tightening. Every time they did a tightening, they did a compensation move, like change the rate of the reverse repo. I talked about repo. I don't want to get this to be really, really confusing, but here's a trick that they use. They'll tell a bank, okay, this is not repo. This is the opposite. It's not a repurchase.
Let me just say, the reason I thought that was such a fascinating example, it just reminded me of fractional reserve banking, right? The slippery slope into the abyss. Because it used to be that the banks used to have gold on hand, right? So you could redeem your money for gold because we had gold certificates and silver certificates. Then they got us away from that. Then it got to the point, well, you need to have 10% of the cash you've loaned out on hand. Not gold at all, just cash, fiat cash. Now they don't even have that on hand. I mean, it's been a slippery slope into the debt abyss, and as it relates to this government, all they do is raise the debt ceiling. Let's hold Congress over a barrel, now let's raise the debt ceiling, right? And that can go on and on and on. Meanwhile, China has created $21 trillion of new money, more than double the U.S. since 2009. So this isn't just a United States problem. It's a race to the bottom globally, which might be why the Dutch central bank is saying, maybe it's time to go back to gold.
Yeah, well, don't leave out the Euro Central Bank. They've expanded their money supply tremendously also. They've been buying corporate bonds for the last 3 years, and that's totally against their charter. So all these central banks are not just loading up on impaired bonds. They're not just expanding on their balance sheets and printing money and swapping it from one continent to another. They're breaking their charters. So they're on illegal, illicit ground. And in doing so, they've extended the crisis and magnified it.
I interrupted you, so you can get back to that repo market.
The reverse repo. The smoke is coming from repo because it's concealing the infinite QE. We must go to infinite QE or the system breaks. But by going to infinite QE and expanding enormously the volume of bond purchases, we're going to wreck the system on the financial platforms, and we're going to lift gold. Gold is sniffing this out. I love that phrase. Several months ago, why did gold decide to move up, up, up in all currencies? Because it sniffed out that the central banks are going to have to go to infinite QE. Okay, I mentioned repo, and that's how they disguise the infinite QE. It's bond purchase. They're purchasing it from the banks. They're not purchasing it from the U.S. government, but they're doing both. But the overnight is doing it from the banks, because the banks they're just jittery, scared, and in trouble. Here's the reverse repo. This speaks to the leverage and the Sears Tower again. The Fed would say to a bank, hey, look, we don't have enough bond demand here. We need more bond purchases. You've got a bunch of cash, and we'd like to give you bonds for the cash so that you can leverage the bonds 100 to 1. That's how they're meeting the demand from this fiscal crisis that I described. Fiscal crisis is we're having trouble financing our deficits in the form of bond securities. Cannot finance our deficits with bonds. So we're helping the banks to buy more bonds by taking their cash, in reverse, giving them the bonds, which we, as a government, are saying to them, leverage 50 or 100 to 1. Now, this isn't the Sears Tower that's an extra 20 floors.
With a smaller base.
It's a Sears Tower that goes from 100 floors to 800. And you know, you got to ask the question, what happens when you get heavy winds? The building falls down. Now, I'm going to mix my metaphors because this is very important, and I have a different metaphor. Okay, it's fine to talk about a Sears Tower going higher and higher with a narrower, smaller footprint in the lobby as a foundation. But what I like to describe now is that we've got a financial crisis, and we got trouble in high yield land. We got trouble in emerging market land. We got trouble in mortgage bond land. We got trouble in car market land. We got trouble in student loan land. We got trouble in municipal fiscal problem land, like, you know, Chicago, Illinois, California, New Jersey, they're all bankrupt. And everybody is being told, well, your safe haven is a treasury bond. It's a traditional safe haven. And what they're saying is, in your giant neighborhood, you've got assaults, you got robberies, you got murders, you got holdups, you got violations of women, you got all these different things, the kids getting their lunch money stolen. The safe haven is in the Treasury building. And it's not going to be long, Sean, before they conclude the Treasury building is on fire.
Let me ask you something. It sounds to me like a Mexican standoff, and as long as nobody pulls the trigger and nobody panics, this can just keep going on. And when I say nobody, I'm talking about the big banks. What is the trigger event? What causes this thing to really seize up and start to collapse in earnest? Does somebody have to flinch?
Somebody has to fail. Somebody has to have a derivative room that goes out of control. A group of companies have to go bankrupt. And I think we're already there. We just haven't been told. I mentioned that I think Deutsche Bank has failed. Deutsche Bank, not Deutsche Bank, the Deutsche Bank. Deutsche Bank, U.S. subsidiary.
Now, why do you feel that way specifically? Because Deutsche Bank, I think the actual Deutsche Bank, not the U.S. subsidiary, has some, 60 trillion in derivative? No, 60. Those numbers get so confusing, that can't possibly be right.
No, I think it's only 48 trillion.
No, but see, isn't that funny? I used the T word, and I immediately pulled myself back and said, no, that can't be right. No, that it is right.
No, it is
right. Like 50 trillion in derivative.
Well, it might be 48
It's madness.
trillion euros. I mean,
Why are you
okay,
more concerned about the U.S. subsidiary of Deutsche Bank?
I think it's okay.
It's being
You,
used to keep
you,
this Ponzi scheme alive.
you asked me what are the triggers, and I said it's a bank that goes into failure, or it's a company or group of companies that go into failure, or it's something that gets neglected. And I think that the effort has been so big to preserve Deutsche Bank in Germany that they might have overlooked some of the subsidiary risks. Okay, I love the other analogy. You know, you got a dike and you got to have a lot of fingers poking in the holes to plug them up. Well, the Deutsche Bank subsidiary might be a dike with holes that they didn't have enough fingers for, or they forgot, or they overlooked, or they were overwhelmed. Okay, you ask the triggers. It's going to be something that overwhelms them. The voice likes to say you're going to have an Archduke Ferdinand kind of event, okay, which was an assassination, you know, of an important person, but the Austro-Hungarian Empire and his king, okay, well, fine, or Kaiser, whatever you want to call him. There might be an event. It could be Society General in France suddenly can't manage their derivative book, and they didn't have the guts, the courage. They were scared to ask for help at the Euro Central Bank. I'm just making something up,
Right.
but it might turn out to be the case. It could be that there was a sabotage event of Wells Fargo because it's the main bank used by China for commercial property purchases with treasury bonds used as leverage. There might have been an attack on that to get the Chinese to move their money out, but they might have underestimated the risk of the leverage effect from pushing out that legitimate asset. It's going to be something from a miscalculation, an overlooked risk, or something that's just grew faster than they thought.
Yeah.
I don't know what it's going to be. I listed a bunch of them. I think the shale industry, the shale sector, is going to have a string of bankruptcies, and it's going to take down a Wall Street bank. And it might have already begun. It might be the event that we're talking about potentially. We're not given the news. Falsifying accounting balance sheet is now part of the U.S. government regulatory system that is legal.
Wow. This is why we have you on, Jim, and I appreciate your time. We're going to talk about just a couple more things here, but I think the point here is that it gets very difficult to manage an exponential debt Ponzi, and that's what we're seeing. Exponential debt. It's growing exponentially. How do they manage it? As best they can until the whole damn thing collapses. For those of you who are new listeners, I would just want to let you know Jim is not schizophrenic. When he mentioned the voice says, came out of Jim's mouth, that's his one of his high-level contacts. So for those who don't know who the voice is.
The voice is a central bank financial expert, consultant, and gold trader. And he's a very busy man. He likes me to keep his identity quiet, keep his nationality quiet, and keep his project load quiet. He doesn't even, in the last 3 years, he hasn't told me what projects he's been on. He was on the stress test a while back for the Shanghai gold oil RMB contract. He was on the stress test for that. Basically, he was on the Petro Yuan stress test, the part that was their currency and oil, which undermined the petrodollar, and it's very, very important. If you don't mind, Sean, could I take a few minutes here to talk about something on my personal?
Yeah, I was going to ask you too. I think you've been the victim of a couple of frauds, and that's really impacted you negatively. So please do tell people how they can help you out and tell us what happened.
Oh boy. Okay, I'll try to keep this to be the shortest description that I've done yet. I've done about 6 or 8 on radio interviews. I came here in 2007. I immediately got around a little bit, met a few Americans, made one woman friend, and I helped her out on her family. Room extensions for a couple of her little Sabrinas, nephews and niece. They call them Sabrino and Sabrina for nephew, niece.
I don't think everybody knows where you are, Jim. Is that public record? Do you care?
Yeah, I'm in Costa Rica. I'm in San Jose. I've been here since 2007. I'm finishing my 13th year. Okay, I got involved in a few nice little, let's just call them generous philanthropy. I don't like the word philanthropy, but they were nice little charitable things that I did, nice, generous gestures. I did something else that worked out well. I did something else that worked out well. And then I decided to do a few other things that wouldn't necessarily be generous gestures for direct aid. I thought it'd be good to try to work out some independent income on the side that could help out an entire group of families, because my gal had about 5 or 6 uncles and aunts, and they're all poor. They're all poor. So when I tried to branch out, one was a parts business for trucks, cars, and buses. Another was a property, another was a property, and another was a property, a house. And I encountered fraud. Oh boy, you said a couple cases of fraud. No, it's more like 6 or 7. The fraud here is unbelievable. The fraud is part of the system. Lawyers are guilty of fraud. They boast of it. They're never kicked off. They never lose their license. They're never kicked out of the College of Attorneys. They call it Colegio de Abogados. They never. Okay, I got defrauded by an attorney for my residence application. Took $3,000. Did absolutely nothing. And of course, he blames the immigration office. The immigration office blames the attorney. You go nowhere. And if you're dumb, you'll file a $1,000 claim against the attorney, and you'll lose that, so you'll add to your loss. Okay, the title fraud is an enormous here. Property title fraud. They'll change the property title owner, and suddenly a person is not the owner. I had my first good friend I made in 2007. His name was Gary. That's all I'll say. He said, Jim, I'm the victim of 2 times fraud. It was a couple of locals, an attorney, a local guy with some money, and me, and they just changed the title, bribed the municipal building guy, agent, a worker, official. You know, all it takes is a couple $100, and poof, you're off the title. Unbelievable. It's just disgusting. But I've been the victim several times. Another one was a water subcontractor in a condominium that we thought, well, let's get in early and get a discount. Well, we lost all of our discount and more because of a water contractor who escaped with $250,000. He went to Panama. They always go to Panama. Panama takes any dirty money at all. No questions, no problem. Come back to Costa Rica and use a debit card and draw on your stolen money. And then I got involved in, a property that had title fraud, and it took 18 months to clear. Okay, you get the idea. There's a lot of fraud here. Also had a car crash that was very costly. And I thought the insurance was Mickey Mouse. Oh, we covered the first $500 of the other person's. We thought it was more than that. But when it comes to rubber hitting the road, oh no, it's only this. Okay, I've lost well over a couple $100,000 here. It was to the point a year ago where it was almost $10,000 a month. And people say to me naively, Jim, why don't you just liquidate? No, it costs a tremendous amount of money to prepare the asset, clean up the asset, get all the paperwork cleared and legalized, and then you sell it at a distressed level because the market's down. I'm doing my dead level best to get out from under approximately 8 or 9 failed projects here. I've got a couple successes. I don't want to get into a lot of details. One was a crime scene. The parts business was a crime scene. The guy was doing incredibly illegal things inside with his partner. Together they had about 35, 38% of the ownership. And I had to pay about $10,000 a month for legal fees, transport fees, maintenance fees, covering improper loans that were made against collateral that wasn't his but was corporate. Oh my gosh. It got so bad, Sean, that a year ago, I was kind of thinking about the end of my days on this planet. I was also thinking about terminating the newsletter. I just couldn't handle it anymore. So instead, in June, I set up a donate button. And I invite people, you don't need to be a Hetrick Letter subscriber to go to the site and hit the donate button. But there's a why donate, which is a description of much of what I'm discussing here for the motives. And I'm very, very grateful. We've had all of July, all of August, all September. Here we are halfway into October. And the donate button has been hit many, many times and has helped me out and has saved my bacon. and I'm not out of the woods yet. I ask people to continue helping me. If you like my work over the last several years, as my father used to say to me, my father was an American literature professor. He's been retired for 20, 30 years, actually over 30 years. My father's almost 100 years of age. My father used to say to me, Jim, you know, this American literature work, I love it. It's a lot of fun. You know, we deal with some reality, we deal with some fantasy, we connect the two, we just have a lot of fun with the symbolism and imagery. And, you know, you're named after Henry James, Jim. I said, yeah, okay, fine. He said, I'm on a mission. This is my mission. I'm not a wealthy man, but I'm on my mission. And I said, Dad, I've got a mission too, and it's to expose the end of the dollar days, the sunset of the petrodollar and the end of the king dollar era. And he, you know, that's a whole conflict I don't want to get into, but my point is that I'm on a mission. And if you appreciate my effort on this mission and have not subscribed to the newsletter, but you follow my interviews on various platforms, including Sean in the last several months, there's some others that I've been on many, many times. Please go to my site, hit the donate button, offer up something small, medium, or large. They add up. I'm very grateful for what people have done so far. And, you know, it's been an education. It's been a nightmare. I still don't sleep well. Now, these are personal issues. These are humbling stories. I made some mistakes. I've got some friends who now guide me and say, Jim, I used to make some mistakes too. The system is rigged. The system is ridiculous here. But I still need some help. I tell you, I wake up at 4 o'clock every morning, 4 o'clock, 4:30 every morning. And it's not always in the sweats, but there's worry on my mind. I need to get through this nightmare. I'm very grateful. Some of the people listening to this probably already have visited the site with the donate, but there are probably a lot more that have not. My own Hattrick Letter subscribers have been the most generous of all. I love them. And, you know, Sean, this is going to sound a little corny, but I'll remember this generosity in helping me out with the PayPal donate button. I'll remember it the rest of my life.
I know you will. All right. Well, we're rooting for you. And guys, if you want to help out Jim, the big yellow donate button can't be missed right at the top of his site. It's golden-jackass.com. So thanks for bringing on all of this information for us, and keep your eye on it, will you? And give me a call when you think things are ready to collapse, when we see that the first flinching happen in that Mexican standoff.
In simple terms, Sean, this is going to be 3 to 5 times bigger than the Lehman event, and it's just starting.
Yeah, Lehman event, 2008.
Right. 3 to 5 times bigger, because the Treasury bond is now the subprime global bond. And big, big explosions are going to happen.
All right, guys, we will leave it right there. Our guest has been Jim Willie, the one and only from golden-jackass.com. Jim, thanks for your time today.
Thanks for having me on.
Yeah, my pleasure. Thanks so much for tuning in, guys. And for real news 24/7, you can always visit us at sgtreport.com, the corporate propaganda antidote. God bless. Bye-bye.
We've got $14 trillion in money in the true money stock. That's all available liquid currency in the system and all physical cash. And the US has $72 trillion of total debt. So there's 5 times more debt than there's available money to pay it off. You could never pay off the debt that's in the system.